This is the second video on manufacturing production cost accounting. This deals with your break-even analysis. Before I come to break-even analysis, there's certain things you need to understand. The first thing is your fixed costs. Now those fixed costs stay the same irrespective of how many units you're making. So they're not going to increase if you're making more units, nor will they decrease if you make fewer units. It's not to say these fixed costs never change, because they can, but just not due to the number of units you're making, rather as a result of things like inflation and so on. So fixed costs that don't increase or decrease, you have to pay them. Your factory overhead costs and your admin costs are relevant here. If you think about it, if you are paying rent for a building, you pay the same rent irrespective of how many units you make in that building. You pay the same insurance for the entire building, and so on. Now, I am aware of the fact that some of your fixed costs are not totally fixed. So, for example, something like electricity. If you're making more products, you're going to spend more on electricity. However, at school level, we disregard all factory overhead costs as fixed to simplify it. Admin costs are also the same. You pay the same rent, the same insurance, etc., irrespective of the number of units you're making. Then you get your variable costs. Variable costs are going to change. They're going to increase if you make more. They're going to decrease if you make fewer products. And your variable costs are your materials, your labor, and your selling and distribution costs. If you're making one product, you're going to need far fewer materials, far less labor, and you've got far less to sell than if you're making 1,000 units. So as you produce more, your direct material costs and your direct labor costs, as well as your selling distribution costs, will increase. As you produce less, they will decrease. Then the term break-even point. Basically, break-even point means you don't make a profit or a loss. I think this is quite a good definition. Break-even point refers to the number of units which must be made and sold, not just made, remember, you've also got to sell them, in order to cover your fixed costs. Even if your factory is not operating, you're still going to have those fixed costs. You're still going to have to pay for the rent. You're still going to have to leave the lights on in the factory for security reasons, and so on. So you need to see how many units you need to make and sell in order to be able to cover those fixed costs so that neither a profit nor a loss is made. Right, let's look at the works example. They give you some information here, and they tell you that the business manufactures side tables. They tell you there's no work in progress at the beginning or end of the year because tables are made to order. Remember, work in progress is stuff that you haven't finished making yet. So it's your semi-manufactured or incomplete products. Right, then they give you some info here. Raw materials used to make the tables consist of wood. And then they tell you that the cost is 120 Rand per square meter, and 1.2 meters squared of wood is used to make each table. During the year, 19,800 meters square of wood was dispatched, but Mr. Dean feels that the wood raw materials were not well controlled, provided calculations to support his opinion rather. Okay, if you have a look here, if you take your 19,800 divided by the 1.2 that it costs used to make each table, you should have made 16,500 tables. But they tell you here that the number of units produced and sold was only 16,000. So therefore they should have made 16,500, they only made 16,000, so therefore it's less than what should have been used. Okay, so I took the 19,800 divided by the amount used per table, and then two possible causes and a solution for each. Okay, there could have been theft of materials, so they didn't have as much as was issued to the factory to use. To solve this problem, you need to improve your security somehow, possibly security cameras, possibly security guards even. Any number of those things would help solve the problem of theft. There could also be wastage of materials. Now, often employees that are not well trained could end up wasting materials because they don't manufacture the item correctly, and that item is therefore not able to be sold. It's a reject. So to solve that problem, you need to train the workers so that they know what they're doing, and in that way they waste less materials. Okay, the next question asks you to provide a calculation to confirm the break-even points. The formula for calculating break-even point is your fixed costs divided by the profit that you're making on your variable costs. So you need to look and see what your fixed costs are here. Remember I told you just now that your fixed costs remain constant irrespective of number of units made and sold. So your factory overheads of 1.216 million as well as your admin cost of 320,000 are your fixed costs. You're then going to take that and you're going to divide it by the profit you're making. So you're going to take the 390 rand selling price and you're going to minus your direct material, direct labor, and your selling and distribution costs. So you're going to add up those three there and subtract it off. And then if you work this out, you get 18,071 units. If you end up with a decimal, always round up to the nearest, not the nearest, always round up. Okay, so even if this here was 18070.1, you make it 18071. Okay, so it's fixed costs divided by the profit you're making, which is your selling price minus your three variable costs per unit. They then ask you to comment on the break-even points. Okay, they told you that you're only making 16,000 units. However, to break even, you need to make 18,071. So if your production level is below your break-even point, that's a negative situation because it's going to mean that you make a loss. So your production sales level is 16,000 units below break-even point, the business is going to make a loss. Okay, they can ask you other questions under manufacturing, things like your control of raw materials have not been well handled, how could you solve the problem, and that's once again you check for theft, you improve your security, you check how much stuff's been wasted and so on. They could ask you how you could reduce your direct labor costs per unit. With your direct labor costs, you can't actually reduce your workers' salaries, but what you can do is you can actually reduce or limit overtime, and in that way you will spend less on labor. They could ask you how you could control your factory overhead costs better. Once again, look at wastage, cut down on unnecessary expenses. Okay, things like water and electricity, use sparingly. Don't just leave your electricity on all the time. Okay, leave it on when only needed. Things like that. Okay, so that's the end of this short video. Once again, refer to the previous video for your production cost statement, question, and in this video for analysis and interpretation. That's it. Thank you.